Hello, I'm David Harrell, editor of the Morningstar Dividend Investor newsletter. In this monthly series, we take a look at the dividend prospects of three stocks that are popular with income investors. Wide Moat Diageo is home of brands such as Guinness, Captain Morgan Rum, and Crown Royal Canadian Whiskey. The company is based in London, but also trades in the US as an ADR. It pays a semi-annual dividend and yields 4.4% based on the two most recent payments. Morningstar equity analysts note that the firm pays out roughly 50% of its earnings as dividends, which is about standard for its industry. They forecast that the annual dividend will increase by approximately 18% by 2029. The stock currently trades in four-star territory at a discount of more than 25% to its fair value estimate of $130 per ADR share. Morningstar equity analysts believe that GSK's dividend payments have been, historically, a bit too high. They note that over the past 5 years, GSK has paid out roughly 70% of normalized earnings as dividends, which they believe has limited the pharmaceutical firm's ability to reinvest via internal R&D and external acquisitions of new pipeline drugs. However, following the divestment of the consumer group in 2022, GSK lowered its dividend to a level that they consider to be more appropriate. They believe that the reduced dividend rate is secure and likely to grow in line with earnings over the next 5 years. Owners of the US ADR shares receive a quarterly payout of 32 pence per share, which at current exchange rates translates into an annual dividend rate of $1.70 and a yield of 3.7%. GSK trades at a 20% discount to fair value, landing it in four-star territory. Kimberly-Clark is a leading manufacturer in the tissue and hygiene space, with brands such as Kleenex, Huggies, and Kotex. The firm is both a dividend aristocrat and a dividend king, having increased its per-share annual dividend payout for 53 consecutive years. The 3.3% dividend hike for 2025 was in line with its 5-year annualized dividend growth rate of 3.4%. The stock currently yields 4.3%, slightly above its 5-year average and above that of peers such as Procter & Gamble and Unilever. In assessing the company's capital allocation, Morningstar analysts said that Kimberly-Clark remains resolute in its desire and ability to return cash to shareholders. Their long-term outlook calls for mid-single-digit annual dividend growth. The stock trades at a 15% discount to its $140 fair value estimate, placing it, like this month's other two stocks, in four-star territory. I'm David Harrell with Morningstar Dividend Investor. Thanks for watching. We'll see you next month.